Hey, what's up, everybody? It's Omar from the Bullish Bears team. Today is December 12th, 2016, and I wanted to make a quick video recap about today's trading today's trading events. So, unfortunately, I wasn't able to trade today because of work and my priorities at work. Uh, supersede trading at this moment. But I wanted to talk about, just a couple of things in regards to today. So, yesterday I posted my watch list, and what did I say about in regards to my watch list? I said, "Hey team, here's my watch list for tomorrow. Remember, as momentum traders, you're looking for swings in either direction to go long or short. The stock, most people only want a long, as shorting stocks come with restrictions and shares are not always easy to come by. Use the scanners to see what's hot pre-market, and when the market opens, you can be ready to buy. A lot of times a watch list may be a dud, and that's why scanners are so important so you can find plays in real time. The patterns, volume, super important, news, technical indicators, support and resistance levels determine whether or not you should place a trade." Now, that was super important today because pre-market we saw this morning that oil seemed to be in play, right? And the two that I pointed out was ORG and SDRL. So what you would do in the event that you're looking at this, and let's look at SDRL, and it finished up 3% higher than its open. So what you're gonna see here is that pre-market. This represents pre-market, and you're gonna see there's some activity here, right? So you're starting to see some movement here, and the price of the stock is starting to gap up, and you see it's working up to 422, and it's by 720, it's all the way up to about 450. And what happened at 450? It actually started to sell off. Remember what I talked about, how whole numbers are resistance points? So what happens is it sells off, right? It goes from, let me just zoom in here. So it goes from 450, and you see the MACD, you see the RSI is hot. It's all the way up in the 80s here. You see the MACD, two lines are starting to cross over, and you see that it's starting to consolidate and come down in price. So it comes down, it comes down, it comes down, it comes down. And then what happens? Right before the market opens at about 925, right? There was a lot of buying pressure here. People started to buy the stock. And if you notice, well, I'm going to zoom in here, okay? You start to see the MACD roll over, and you had to be super quick. And at 9:30, when the market opened, it opened at a low of 446, a high of 448, and it closed at 448. But between 9:30 and you notice here, between 9:30 and 9:34, it hit its peak. And this is a doji where this is a sort of an indecision doji candle, where usually when you see this, there's usually going to be a directional change. And if you notice, the RSI was hot, the lines were beginning to roll over, and it just sold off. It completely sold off. That's why you have to be very, very careful. And this is what I think somebody was looking to trade this pre-market, and I told them, wait until the market opens to get a sense of the direction of where the market is going. What happened was people kind of, exhausted the stock in the pre-market. That happens sometimes, So, you never really know what direction a stock is going to go in, and that's why you need to have your stop loss. So let's say you would have saw this and you got comfortable here, and you said, okay, I'm gonna make a trade here, and you get executed, and let's say you want to wait till it goes to 450, over 450, because 450 is a psychological resistance barrier. So you get executed, let's say at 451, okay, and you're riding it now. So the next candle, the next 1 minute candle, it hits a high of 455, and it closes at 454, and the next candles hit that high of 459. What you should be doing is moving your stop loss as each candle goes, so you can secure your profit. You should be moving your stop loss to the close of that 1 minute candle so that you can secure your stop loss. If you want to keep it real tight and you're not sure which direction the stock is going to go in, because look what happened, it absolutely sold off. And that's why you always want to make sure you have your stop loss set. When you first enter the trade, your stop loss should be the low of the candle, or at least the low of the previous 1 minute candle, okay? And that way you keep your losses to a minimum, And what happened was this sold off, okay? And it found its support here at about 421. And what happened was that here at 421, some people probably dip bought it, and they saw that this caught support, and they rolled it back up to about 443. So there was an opportunity to make some money here, but there wasn't a tremendous amount of volume. So you guys also gotta keep that in mind too. And then it just kind of like consolidated, and it just kind of like collapsed, right? It collapsed all the way down, and it found its support at like 403. And then I saw it here. I was at work, and I said, let's see if it can go test VWAP. But what I didn't see on my on my at work was, this is the 50-day moving average, and that's an actual resistance barrier. And sometimes, you got to make sure that it breaks that before you place a bid in. But what I was hoping to see was that it would go from full 3 and work its way back up to VWAP, which is here, the volume weighted moving average, volume weighted average price. I'm sorry. And and sometimes you'll hear me talk about these technical indicators, and you're not sure what they mean. If you're not sure what they mean, guys, go on YouTube, type the word, and watch a video. That's the way I learned. You're just gonna have to put a lot of time and energy in studying. If you gotta ask these questions, guys, you should not be trading with actual money. You should be just learning and studying, and use the training account to make your trades until this starts clicking and making sense. Trading is like any other profession. It takes a lot of time to learn, and you just gotta be real careful with this. What I suggest is, like, let's say the market opens, and I really haven't spoke to a lot of this yet, but what I usually do is, let's say you see a trend upwards. What you want to do is, as soon as you're seeing a stock gapping in one direction, you put what's called a trend line. So let's say I got executed here. What I would have done was put a trend line straight up, so that the trend is your friend. Once the stock breaks the trend, then there's a reversal. So had I bought this, and once I saw the candle break here, I would have stopped out, or I could have gone short. Okay, stopped out and then re-entered my position and got short. But things happen so fast that most likely you're just gonna just stop out and just watch the stock go. All right, and that was SDR. The other stock was that I was on my watch list that I talked about this morning was ORIG. So if you notice, ORG closed the previous day, actually on Friday at 221, and then pre-market it was ripping. So if you notice here, people were buying shares, and if you notice, the MACD2 lines here were very bullish, but it was oversold. It was hot, so it was going to pull back at some point. But it got as far as 274, and it kind of consolidated right here, which is a good sign. And then it ripped, and the market opened, and then you had to be quick. But if you notice, it opened at 271, it closed at 266, and then it opened at 271, and it closed at 266.37. That's why you get this little red candle. It closed a little lower than this price. And then it just kind of like ripped a little bit. It got all the way up to 289, and then it kind of just like sold off. And you see it kind of rode, it broke the 9 EMA, and it hit the 20 EMA. And then you're going to see the lines cross over here. So a lot of people, who understand what shorting is, they would have shorted right around in this area. And shorting basically means that you're borrowing shares from your broker because you're saying that you expect the price of the stock to go down. All right. So let's say you would have shorted somewhere in here, and you would have got executed. Let's say at let's say you got executed at 270, let's say 280. All right. And you're riding it down, right? Because you see the MACD2 lines cross over, and now these all are resistance points, the 9 and 20 EMA, and you see it bounce, and you go down, and you see it just collapsed. I mean, it would have been a nice short. And then somewhere in here, when you start seeing that reversal happen, you kind of cover. So let's say you would have got short at 280, and then you buy the cover. So, and what that means, just so you can see it visually, is you would sell short, right? So you sell the shit. So you're borrowing the shares at like 280, and then when you're ready to close your position, you buy the cover. So if you'd have bought to cover somewhere in here, you would have made, let's say 280, 270, 260. So you would have made about 25 cents on shorting the stock. Okay, so there was a good shorting opportunity there. All right, and that's sort of how that works. But what you should have done, and when you get more comfortable, you'll understand this, was that you would have saw in the gap in the three candle gap scan, the new highs, and also the highest percentage gainers. So there's like other filters that you can leverage here, such as like if you go here and you just go to top percentage gainers, you would have seen the top percentage gainers here, and the biggest percentage gainer, and people saw this ripping in pre-market was AKAO. This was the big winner today. So, and people were talking about this stock and Twitter and everything pre-market. I didn't really get a chance to tell anybody in the group because I was working. But what happened was in the pre-market, this started ripping, and what caused it to rip? So remember, you need some sort of catalyst, and there was some news. Okay, there was some news about this stock. Uh, let's see. Let's see what happened. Man, so many shares. Here it is. There was some sort. So this was a biotech stock. Was holding pre-market. The company had positive results in two phase 3 trials. They evaluated its lead product candidate, plasmocyan, plasmomycin, as a treatment for multi-drug resistant gram-negative infection. So basically, there was some positive study results, and that's what drove the price up. So pre-market, when that news report happened, this thing just ripped all the way up to like from, I don't know what it was trading the previous day. It was at $5. It went from $5 to like $8 pre-market, and there was volume and stuff was happening. But you see it kind of like hit its high and then it consolidated, and that's why I don't trade pre-market. Pre-market, I mean, you just got it's risky. And then it kind of just started ripping again, and it started gaining some momentum. So what's happening is at 7 that news article is posting, and then people are posting on Twitter and stock tweets and Facebook, and other buyers are getting in and they're seeing this and they're revving up. And what's happening is they're seeing it consolidate sideways, and then boom, the market opens and this thing rips, and you get a lot of volume. And this is what you should look at: stocks with volume. So you need stocks that are liquid so that you can get in and you can buy. And you would have saw this in your you would have saw this in the highest percentage gainers. You would have saw this at the new highs, and you also would have saw this in that three candle gap scan that I created. It would have pulled in right here. It would have appeared at the close of this candle. And if you notice, it kind of consolidates, and then you get this volume push, and that starts driving the price up. And you see it's above the 9 EMA. And if I zoom in here, okay, this is what happens. It starts gapping upwards, and once it crossed this, remember we trade patterns, right? New daily highs, that would have hit the new daily high, and I would have been in him right here if I was watching this at 794, and it kind of just gapped up. And you see it's not too far from the 9 EMA. So let's say you had missed out and you're not sure what to do. You're gonna wait for that first pullback, and that's gonna be an entry. So you see how there's some distance between the 9 EMA and people here that are starting to take their profit. And right here would have been your entry point. As soon as it touched the 9 EMA and didn't break below it, you would have been, and this thing just ripped all day. I mean, nobody expects for this to rip, but you see how you have the bull flag here. It gaps up, bull flag. Then it goes up, gaps up, bull flag, pulls back. And then it kind of just went up. At some point it did, some people took some profit here and it hit this is the 50-day moving average. And it kind of went below it and then went up. And I would have been out like right here, because there's no way. And at that point, I would have been up $1, so I would have been super happy. I mean, nobody expected this to go. This thing went all the way up to $13. Look at this. This thing ripped from, it's crazy, from $7 to $13. And nobody's holding it that long because nobody expects it to go up to $13, So what I would have been doing is, as the price of this is gapping up, I'm just moving my stop loss, my stop limit up, so I can secure my profit, And you had plenty of entries to get back in this thing. I mean, there were plenty of moments that you could have gotten in this. I mean, all day this thing was ripping, but nobody would have expected this. And this is what happens when a stock is up already 100, 200%. People are scared to jump in because they're like preparing, they're anticipating a reversal, and they're anticipating a huge sell-off. But this didn't happen. I mean, it just ripped all the way. And tomorrow, this may rip again. Who knows? But look, it's already starting to sell off. It's already starting to consolidate. It's down right now to $11. Actually, it's trading at, it's at $12 right now. It's about to break $12. Okay? So, it's getting, look, there's some sales people here getting executed at $12. So, you just never really know what's going to happen. All right, and this may just sell off and die off tomorrow. Who knows? But maybe it rips again tomorrow, right? And there was a couple of other stocks that ripped as well. And let's go into the scan. And I just have this default percentage scan. I just clicked here. There was a couple of others that did rip. Let's see here. ESSI was another one that sort of ripped market open. So yeah, this thing had a nice run at the market open. So you see, it kind of gapped up, kind of consolidated here. And then just sort of kind of just ripped all morning long, and you see it's just riding the 9 EMA, which makes it nice and easy to kind of follow. You just sell when you see it break below it. So like if I had gotten executed somewhere over here, I would have, probably, you know, closed most of my position off, part of my position here, and then you see it kind of rips again, all the way up to like about 314, and then sort of sold off. But obviously, it's in hindsight, it's a lot easier said. When you're seeing it in real time, it's difficult. So, a lot of these stocks in my watch list didn't really do much today, and that's gonna happen from time to time, right? So there's a couple of other stocks that were on my watch list here, like for example SDLP. The stock opened up and then it kind of sold off. And then what I talked about, remember guys, I said you dip buys. So when a stock sells off at the market open, you just watch it. And then what you're waiting to do is see where it finds support. So as soon as it finds support, what you do is you put an actual trend line. Okay? Oops. So you put a trend line, and then what you do is you ride the bounce. So the low of this was it closed at 470. No, I'm sorry. It closed at 476. And then you could have just kind of rolled it back up and scalped this almost to about $5. Then it hit a high of 495, so you could have made like 20 cents on the upside. But they didn't have a lot of volume. Stocks didn't have a lot of volume. But this is what day traders do. They scalp, and 20 cents could be a little bit, it could be a lot. But really, what you want to invest in are stocks that are liquid. Stocks like, look at this. I mean, 54 million shares. Doesn't matter how many shares you buy, you're gonna get executed. But when you buy a stock that has a little bit of shares, like for example, like MJPI, like the whole day, a total of 484,000 shares traded. It's harder to get executed when you buy invest in these low volume stocks where there's no liquidity. If you're taking a small position, then it's fine. And this thing had a sell off in the morning market open, and it found its support here 179, and you could have bought the bounce. All right, and it actually went up well over $2. But the only problem is that there's not a ton of volume here. So that's the thing you got to be concerned about. There's not a ton of volume here. It shows like, I don't know, like 11,000 shares. So if you're buying a few hundred shares, 400, 500 shares, that's good. But you can't take a $10,000 10,000 share position on a stock like this, because you're not going to get executed. So you just got to be more mindful. But you could have played this and made some money on the upside. So remember, that's what we're looking for. We're looking for big movement either way. The stock that disappointed me the most was HMNY, because I thought that this had the potential to rip today, but it was a dud. It didn't really do anything. The market opened, it kind of like sold off, and there was a bounce play here at 431. It's where it found its support, and you could have rolled it back up actually at 479. You could have made some money. There was some volume here. This was like the only time where there was some real volume here. You could have probably got like 1,000 share position somewhere in here. At support level, you could have got in like right in here. I would have gotten in like in the 440s, looking to make 10 cents. I probably would have been scared to hold after 450, because I don't know if it's going to, bounce past 450 because that psychological resistance bar. But it actually broke it. There was some pressure here, and it actually went all the way back up as high as 480. So, so when you look at your watch list and your watch list is not doing anything, you want to make sure you're looking at the highest percentage gainers pre-market, see what's moving, so that when the market opens, you can kind of get a sense of what's going on. So, that's sort of how trading works. And if you're still not comfortable with how the indicators work and, some of the jargon that I'm using, definitely you shouldn't be trading with real money, okay? So with that said, I hope this makes sense. It's my market recap, and if you have any questions, just hit me up on Facebook. All right, talk to you later, guys.